Good evening, everyone. I would request everyone to kindly settle down. We are just about to start proceedings for the meeting. So if you can kindly settle down, then we can start the proceedings. Thank you.
Good afternoon. Welcome guests and the topmost management of Gas Authority of India Limited after the Q4 and annual result. This is the analyst meet hosted by Gas Authority of India Limited and ICICI Securities. I am very pleased to give a brief introduction of the management. Before that, I am Jaideep Goswami, Head of Institutional Equity of ICICI Securities, and very happy to introduce the top management of Gas Authority present at the dais. Mr. Sandeep Kumar Gupta, CMD of Gas Authority of India Limited, India's leading natural gas company with diversified interests across the natural gas value chain of trading, transmission, LPG production and transmission, LNG regasification, petrochemicals, city gas, ENP, etc. Mr. Gupta is also Chairman of Standing Conference of Public Enterprises, SCOPE, an apex professional organization representing the central government public enterprises. Before joining GAIL in October 22, Mr. Gupta held the position of Director Finance since August 2019 on the board of Indian Oil Corporation Limited. As Director Finance, he was in charge of F&A, Treasury, Pricing, International Trade, Optimization, Information Systems, Corporate Affairs, Legal and Risk Management. Mr. Gupta is a Fellow of the Institute of Chartered Accountants of India and has received prestigious individual recognition such as CA, CFO, Large Corporate, Manufacturing and Infrastructure category in January 2021 by ICAI and adjudged among top 30 CFOs in India by StartupLens.com in May 2022. He has wide experience of over 34 years in oil and gas industry. Please welcome Mr. Sandeep Gupta. We also have with us Sri Rakesh Kumar Jain, Director Finance, GAIL. Sri Rakesh Kumar Jain is a cost and management accountant by profession. He has rich and varied experience of around 31 years of working in oil and gas sector and regulator. Prior to his appointment as Director Finance, Sri Jain held the position of Executive Director F&A HOD in GAIL. Additionally, Sri Jain holds the position of Chairman in Indraprastha Gas Limited and Bengal Gas Company Limited and as Director in GAIL Gas Limited, GAIL Global USA Inc., GAIL Global USA LNG LLC. Earlier, he was on the board of Ratnagiri Gas and Power Private Limited, RGPPL, and Bhagyanagar Gas Limited, BGL. As Executive Director F&A HOD, he headed corporate finance and was actively involved in mobilization of funds from domestic and international markets, major investment decisions in various infrastructure projects. He has also been actively involved in investor relations and interactions with analysts fraternity. He has also worked in almost all business verticals of GAIL, including GAIL's largest petrochemical plant at Pata. He has major contribution in formulation of LNG, RLNG sourcing, and sales policy and hedging policy to mitigate the risk as well as hedging of the underlying assets. Sri Jain has worked in the areas of treasury, including forex risk management, capital budgeting, corporate budgets, corporate accounts, finalization of long-term international LNG and gas agreements, pricing, liquefaction and regasification, terminal service agreement, mergers and acquisitions, taxation and regulatory aspects. Besides serving a long tenure at GAIL, he was on deputation to Petroleum and Natural Gas Regulatory Board, PNGRB, as Joint Director, Commercial and Finance. During his stint at PNGRB, he was actively engaged in the review of tariff regulations, conceptualization of unified tariff, authorization of CGD, 9th and 10th, bidding rounds, finance functions, etc. Please welcome Mr. Jain. We have with us Mr. Shashi Menon, ED F&A profile. Sri Shashi Menon joined GAIL Limited in the year 1992. He possesses enriched experience over 3 decades in the oil and gas sector. He is head of Finance and Accounts Department of GAIL. He is virtuoso in key functions of F&A departments such as corporate treasury, corporate taxation, central accounts, management accounting, cell and embedded functions of finance related to business development and marketing. He is key person and pioneer in implementing various centralization and digitization initiatives like centralization of gas invoicing, vendor payment process through VIM, employee payments like medical and impressed, and swift integration and robotic process automation. Please welcome Mr. Shashi Menon. We have with us also Mr. Kaviraj, heading LNG and shipping portfolio of GAIL. Mr. Kaviraj is an engineering and business graduate. He has a vast experience of over 30 years in the natural gas space and has contributed in the evolution of the Indian gas sector. He is known for bringing operational efficiencies in GAIL's LNG portfolio management with different optimization structure, which helped GAIL establishing a footprint in global LNG industry. Please welcome Mr. Kaviraj. So with this brief introduction, I have a high pleasure to hand over the podium to Mr. Gupta to give his initial remarks and formally start the investor interaction. So over to you, sir.
Thank you, Mr. Jaideep Goswami from ICICI Securities, my colleagues from GAILIndia Limited, and dear friends from investors and analysts community. Good afternoon and very warm welcome from GAILIndia Limited to this investor and analyst meet 2023. We are very thankful to all of you for attending this meet in such large numbers. As communicated from time to time by earning calls and in various meetings, that in view of the geopolitical situation and the testing business scenario, the financial year 22-23 was a challenging year. On account of the various measures taken during the year, GAIL has been able to protect its profitability to a significant level, and going forward, we are into a better situation as compared to the one during the year gone by. The results for the quarter and the year ending 31st March 23 have been declared yesterday on 18th May 23. For financial year 23, GAIL achieved highest ever gross turnover of rupees 1,43,976 crore, which is an increase of 57% over previous year. And as you would know, we have crossed the 1 lakh mark for the first time in the history of the company. Though PBT stood at rupees 6,584 crore and PAT at rupees 5,302 crore, which is less than the corresponding, less than the previous year. On a consolidated basis, GAIL clocked a turnover of rupees 1,45,531 crore in financial year 23 versus rupees 92,636 crore in previous year. PBT is down at rupees 7,256 crore and PAT is down at rupees 5,616 crore. During the year, company has declared an interim dividend of rupees 4 per share amounting to rupees 2,630 crore, which works out to a payout ratio of approximately 50%. GAIL completed buyback of approximately 5.7 crore shares at a price of rupees 190 per share, aggregating to approximately rupees 1083 crores. And further, GAIL also issued bonus shares in the ratio of 1:2 during the last fiscal. The total capex for financial year 23 is approximately rupees 9,100 crore, mainly on pipelines, petrochemicals, CGD projects, operational capex, equity contribution, etc. The company has also embarked into alternate energies like green hydrogen, renewables and biofuel projects, which are of national importance and would enable GAIL to be future ready for energy transition. Now I come to the performance highlights for periods and for certain verticals. First, financial highlights for this quarter versus the immediately preceding quarter. GAIL's gross turnover stood at rupees 32,684 crore in the current quarter, as against rupees 35,316 crore in Q3. The PBT during the quarter increased to rupees 591 crore as against rupees 223 crore during Q3, mainly due to better performance of gas marketing segment, increase in LHC price realization and higher dividend receipts. The PAT during the quarter increased to rupees 604 crore as against rupees 246 crore in Q3, mainly for the reasons mentioned for PBT. Now, physical performance for current quarter versus previous quarter. Gas marketing volume stood at 96.46 million standard cubic meters per day in current quarter, that is Q4 of 23, as against 89.89 in the previous quarter. Natural gas transmission volume stood at 108.23 million standard cubic meters per day in current quarter, that is Q4, as against 103.74 in previous quarter. And the capacity utilization of our pipelines was approximately 53%. Polymer production stood at 147 TMT as against 68 TMT in Q3. The production increased in view of operations of plant at full load starting from the month of March 23. LHC production stood at 232 TMT as against 247 TMT in Q3. The capacity utilization was 66%. LPG transmission stood at 1079 TMT as against 1101 TMT in Q3, and the capacity utilization was at 113%. Consolidated financials, Q4 versus Q3. Consolidated turnover in current quarter stood at 33,086 crore versus rupees 35,870 crore in the previous quarter. The PBT in the current quarter is rupees 689 crore versus rupees 662 crore in Q3. The PAT is rupees 634 crore versus rupees 414 crore in Q3. GAIL CGD business. GAIL is having infrastructure of 153 CNG stations and approximately 2,62,000 DPNG connections. During the financial year 22-23, 34 new CNG stations and around 61,000 new domestic PNG connections were added. The physical volume supplied is approximately 0.24 million standard cubic meters per day during the year. The next 2 years, GAIL targets to add over 100 new CNG stations and 2 lakh new DPNG connections. Coming to GAIL Gas Limited, which is our wholly owned subsidiary, during the current financial year 22-23, gross turnover stood at rupees 10,524 crore as against rupees 6,853 crore in 21-22. Mainly due to increase in volume and average sales prices. PBT increased to rupees 400 crore in current year as against rupees 383 crore in 21-22. PAT increased to rupees 297 crore as against rupees 283 crore in previous fiscal. The physical volume during the year remained flat at approximately 5.70 million cubic meters per day. During financial year 22-23, 117 new CNG stations and approximately 87,000 new DPNG connections were added, out of which 40 CNG stations have been added at Bangalore location. GAIL Gas, along with its JVs and subsidiaries, has infrastructure of 8.66 lakhs DPNG connections and 456 CNG stations, out of which Bangalore contributes 109 CNG stations and approximately 2.61 lakhs 2,60,000 DPNG connections as on 31st March 23. During the current quarter, gross turnover of GAIL Gas stood at rupees 2,522 crore as against rupees 2,623 crore in Q3. PBT stood at rupees 90 crore as against rupees 112 crore in Q3. PAT stood at rupees 67 crore as against rupees 87 crore in Q3. The physical volume during the quarter remained flat at 5.75 million standard cubic meters per day. During Q4, 98 new CNG stations and 47,800 new DPNG connections were added. In project performance, Mumbai-Nagpur-Jharsuguda pipeline construction activities are moving in full swing, and Mumbai-Nagpur section of approximately 698 kilometers is expected to be completed by December 23, that is by end of this year itself. Jagdishpur-Haldia-Bokaro-Dhamra pipeline of 2,378 kilometers out of total pipeline length of 3,291 kilometers has been commissioned, and remaining part is expected to be progressively completed by June 24. Srikakulam to Angul main line of length 423 kilometers is likely to be completed by March 24. PDH-PP plant at Usar, the tendering activities for all major items have been completed and site activities are in full swing. The mechanical completion of the project is slated in April 25. PP plant at Pata is also likely to be completed, mechanical completion to be completed by July 24. Now coming to segmental outlook. First, natural gas transmission. Transmission volume is expected to increase from 107 million standard cubic meters per day in financial year 22-23 to approximately 118 in 23-24. Further, higher fuel costs in FY23 is unlikely to continue in financial year 24 due to softening of prices. Expected upside in transmission margin due to same is approximately 1,500 crore. You may be aware that PNGRB has approved the tariff for GAIL's integrated pipeline network at rupees 58.61 per MBG, and this revision itself is also likely to give us incremental profits of 1,500 crore. Company has submitted integrated tariff of rupees 68.55 per MBG to PNGRB, against which the regulator has approved this 58.61, and company has submitted a review petition for the moderation done by PNGRB in the tariff order, and it is expected that they will take our review petition in due course of time. Under gas marketing, despite various challenges, GAIL has been able to clock the gas marketing profits of approximately rupees 3,000 crore during financial year 23, and it is expected that GAIL will be able to earn profits in this segment in the range of approximately rupees 3,500 crore in financial year 23-24. Under polymer, in view of softening of LNG prices, we expect to run our Pata petrochemicals plant at full load and have good margins in financial year 23-24, considering the current LNG prices. Under LHC, on account of acceptance of recommendation of Kirit Parikh panel, where ceiling rate of $6.5 per MBG for the gas from legacy or old fields has been fixed, there will be a positive impact on LHC segment to the tune of approximately 1,100 crore per annum. And currently LHC prices are around 50,000 per metric ton, which are on suppressed side, and as compared to average price of 60,000 per metric ton, and hence we also expect an increase of about 90 to 100 crore in this segment going forward. I end my highlights here and hand over back to Mr. Goswami. Thank you very much.
We can open the floor now.
Oh, sorry. There is a presentation. Okay. So there is going to be a presentation by Mr. Shashi Menon, our ED Finance, and also by Mr. Praveer Agarwal, our CGM Marketing.
Thank you, sir. Good afternoon, ladies and gentlemen. I'll take you through this presentation. This is our safe harbor statement. Our company vision, mission and vision statement. Our mission is enhance quality of life through clean energy and beyond. Vision is be the leader in natural gas value chain and beyond, with global presence, creating value for stakeholders with environmental responsibilities. This would be the layout of the presentation. So this is the company overview. This would be a snapshot of the major business portfolio. Starting with gas transmission and marketing, we have about 15,400 kilometers of pipeline networks across the country. Long-term portfolio of 15 MMTPA. Petrochemicals, we have 18% domestic market shares. Our Pata plant has got a capacity of 800 KTA and 280 KTA at BCPL. LPG and liquid hydrocarbons, we got 5 processing plants across India, 1.4 MMTP of capacity, 4.55 MMTP of LPG transmission capacity. Our ENP profile is we have presence in 13 blocks and presence in US and Myanmar. Renewable energies, we have got 118 megawatt of wind power capacity, 13.8 megawatt of solar power capacities. Our city gas distribution, considering GAIL and its subsidiaries, we have got 67 GAs out of the total 295 GAs. This is our global presence. We have presence in USA through our GGUI and GUL, where we have presence in the shale gas and the tolling agreement, presence in Egypt and the retail gas business there. We have 100% subsidiary in Singapore in the LNG trading hub. We have ENP presence in Myanmar through the A1, A3 block, in China through China Gas, and we also have a presence in the Bharat Energy office in Russia. This is a snapshot of our sustainability development. GAIL has set a target of achieving net zero status by 2040 for the Scope 1 and Scope 2 emissions. That is reaching 100% for Scope 1 and Scope 2 by 2040 and 35% on Scope 3 emissions by 2040, keeping the baseline as 2021. GAIL was accorded Green Ribbon Champions by CNBC Network 18. The award recognizes GAIL's initiative and projects across sustainability, afforestation, waste management, renewables, and more. GAILIndia got a grade rating for being India's most sustainable companies, among the most sustainable companies in 2022 by Business World magazine. GAIL ranks first among PSUs in Climate Leadership Report of 2022 by Futurescope and Economic Times Edge. GAIL embarked upon a journey of adopting sustainability Factory Green Co rating. In the last 3 years, 6 GAIL sites have achieved silver rating. GAIL is included in the FTSE 4 Good Index series for the sixth time in a row, affirming companies' strong commitments towards ESG practices in the oil and gas sector. This is our shareholding pattern. President of India, 51.52%. FPI is 16.28%. ONGC, 4.97%. Mutual funds have 8.38%. LIC has got 7.86% and others around 8.5%. Market capitalization as on 31st March stands at 69,203 crores. This is our CSR initiatives. We are proud of our CSR initiatives under the Hriday umbrella, and our CSR ranges from health and sanitation, education, skill development, hospital extension, CNG boats in Varanasi, and many more. We expensed 173.37 crores in this financial, which is 2.1% of the average profits of the past 3 financials. Let me get into the performance highlights. These are the major highlights for FY22-23. GAIL turnover surpassed 1 trillion first time in the history of the company. We implemented the Sparsh and Sarthi platform for the vendor invoice management. Received nil comments from CAG for accounts of 21-22, that is 13th year in a row. GAIL was awarded the Bronze Shield by SAFA under power and energy categories for best presented annual report. GAIL has been declared winner for Gold Trophy under the non-deemed corporate above 5,000 crores turnover category in TIOL National Taxation Award 2022. GAIL paid interim dividend at the rate of 40% of paid-up capital for FY23, amounting to 2,600 crores, and completed buyback up to 5.7 crore shares at the rate of 190 per share. Company has also issued bonus shares of 1 for every 2 held. GAIL also raised INR bonds in December 22 to the tune of 1575 crores at a very competitive rate of 7.34% per annum. Continuing with the major highlights, Honorable Supreme Court dismissed SLP filed by Gujarat Sales Tax Department against demand of sales tax and interest thereon to the tune of 5,000 crores for treating NG transmission as interest sales instead of the branch transfer. We also signed a unilateral advance pricing agreement at the rate of 8.5% with CBDT for LNG imports from US. GAIL acquired 26% stake in LNG Japonica vessel of Mitsui OSK Lines, Japan. NCLT approved resolution plan for acquisition of JBF Petrochemicals Limited. Credit rating of GAIL, the domestic credit rating is at AAA with stable outlook. International rating of Baa3 with stable outlook from Moody's, and BBB minus with stable outlook Fitch. These are equivalent to the sovereign rating of India. Now going forward to the physical performance, gas volumes, that is the transmission volume stood at 107. In FY23, gas marketing 95. To the right is the gas marketing mix and gas transmission mix. 42% of the pie is towards APM, non-APM, and RLNG is towards 19%. Spot is 6%, midterm 19%, and overseas sales stood at 12%. The gas transmission mixes also reflected to the right of it. Petrochemical sales stood at 399 TMT, liquid hydrocarbon sales 929, LPG transmission 4,335. This is the natural gas sector-wise supply, FY22 compared with FY23. Just to give you a sense of the market, 12% of our marketing volumes have been sold overseas. Out of the remaining 44% has been sourced from domestic sources, 44% from RLNG and spot, and our anchor customers are the fertilizers, power and CGD business, and about 15% goes to others. Others include steel, refineries, sponge iron, petrochemicals, and GAIL's own internal consumption. This is the financial performance standalone. Turnover 1,43,976 crores. Gross margin stands at 9,384 crores. Profit before tax at 6,584 crores. Profit after tax 5,302 crores. We also would like to share with you the one-offs of this financials. Gas transmission segment, I'm taking it segment-wise. Transmission segment, deallocation of domestic gas for compressor fuel, 800 crores. A refund of transmission charges of IPCL, 70 crores. Gas handling loss and maintenance used gas, 150 crores. Provision for KKM BPL is 110 crores, totaling to 1,130 crores of one-offs from the transmission vertical. Gas marketing segment, we have inventory loss booked in Q3 and inventory losses booked in Q4, totaling to 1,330 crores. Other segments, one-off was provision for Tapi pipeline stood at 55 crores. These were the negative one-offs, totaling to 2,500 crores. Against this, we had a positive one-offs also, refund of CST from Gujarat sales tax at 70 crores, provision of ENP R block A3, 50 crores. So the net impact one-off is 2,395 crores. This is the balance sheet snapshot. Capital employed stood at 71,544 crores, net worth 50,860 crores, and loan outstanding of 9,807 crores. Key financial ratios, PAT to net worth 10%, return on capital employed 10%, debt to equity at 0.22, share prices at 105, earnings per share 8, and market capitalization at 69,203 crores. This is the financial performance on a consolidated basis. Turnover FY23 1,45,531 crores. Gross margins at 10,325 crores. Profit before tax 7,256 crores, and profit after tax 5,616 crores. This is the revenue reconciliation on consolidated basis FY23. After netting off the eliminations, it stood at 1,45,875 crores. PAT reconciliation on a consolidated basis, FY23, considering GAIL, its subsidiaries and associated, stood at 5,616 crores. This is the capital expenditure profile for FY 2023 and the projection for 2024. The capex stood at 9,100 crores in this financial. Most of a major part of the capex is towards pipeline, 53%. Petrochemicals is around 15%. Equity participation is around 12%. E&P 3%, and operational capex is at 15%. The projection is for capex is, next year is 10,200 crores, and similar profile pipeline 40%. We see a bit of tapering there. Then petrochemicals 1,800 crores, equity and investments will be at 32%. The next is actual capex and capital commitment in major projects up to 31st March 23. I'll just go through the pipeline-wise. Phulpur Dhobi pipeline, JHBW 1. This is commissioned, and actual capex up to 31 March is 3,000 crores. Dhamra Angol, expected commissioning 30th June. Dhobi Durgapur pipeline is commissioned. Bokaro Angol, again commissioned with actual capex up to 2,552 crores. Durgapur Haldia, expected commissioning is 30 June 24. Barauni Guwahati, 31st October 2023. Dhamra Haldia, 30th June 2024. KKMBBL phase 2, that is 30th November 2024, sorry. And Srikakulam Angol, 31st December 2024. And Mumbai Nagpur Jasuguda, 31st October 24. Major petrochemical projects, PDHPP Usar is expected to be mechanically completed by April 2025, and the capex is incurred till 31st March is 1,300 crores. Polypropylene project of Pata, the 60 KTA project, is expected to be mechanically completed by July 24, and we have a capex of 358 crores as of 31st March 23. Now, Mr. Praveer, my colleague, will take you through the industry outlook. Thank you so much.
Good afternoon, ladies and gentlemen. I am Praveer Agrawal, Chief General Manager Marketing from GAIL. So I'll be taking you through the industry outlook. So if we talk about global energy scenario and its evolving narrative, so last year, 2023, was shaped by several factors, including COVID-19 pandemic and geopolitical tensions. There was and is some looming threat of recession, supply chain challenges, continuing shift towards renewable energy sources. So these were some of the factors. The energy transition has continued. Many governments seek alternatives to volatile energy commodities. So what is happening is that the economic competitiveness of key clean energy technologies are improving with time, and global renewable energy capacity has also increased by 9.6% last year. So almost half of the new capacity was added in Asia. Wind and solar power accounted for almost 90% of the net additions. Last year was a year where oil rose well above $100 per barrel in mid-2022. Coal prices also hit record levels. gas markets were at the epicenter of the global energy turmoil as Russia cut down supplies to Europe, and we had seen global prices of spot purchase of even $70 per MMBTU. In 2022, the LNG market saw a great deal of term contracting activity. Almost 52 LNG SPAs signed with a tenure of 10 years or longer in 22. So now, what we see that though the developed countries will become more efficient going forward, developing countries, which represent 80% of the world's population, will use more energy as they pursue better living standards. Brazil, China, India, Indonesia, Mexico, and South Africa together consume more than one-third of the world's energy, which is expected to rise to 40%. With demand growing as energy needs expand, Asia presents the opportunity to grow the LNG market, as natural gas can be used to replace coal and wood to reduce the emission. Share of gas in developed market may decline as these countries scramble to meet net zero goals. It is going to increase in the developing world as their net zero targets are a bit far in terms of timeline. So what happens is that the developed countries may be using more efficient methods and renewable energy more, and while the developing world will be using more of gas. And so while lower emission sources may play important roles, natural gas will remain a significant part of the energy mix for decades, reinforcing the need of continued investment. Key to gas growth will be in maintaining an affordable, resilient supply that is sustainable for the planet. So continuing a bit further in global energy consumption, we find that India natural gas basket is still at 6.32%, while it is in China it is 8.65%. The world average is 24.42. So there is good enough scope in that part. The renewables have also started catching up, and our renewables are almost 5% of the energy mix. Now, Indian energy scenario, we come to that. The target of net zero for India is by 2070, while for our organization we have took it up for 2040. Energy demand in India is growing rapidly with major implications for the global energy market. India has seen its energy demand increasing rapidly. The country continues to urbanize. Development of manufacturing sector is another factor. India has made remarkable progress in providing access to electricity and clean cooking fuel. We implemented a range of energy market reforms and integrating a high share of renewable energy sources into the grid. India's continued reliance of imported fuel creates vulnerabilities. Price cycles and volatility is one issue, and possible disruptions to supply is another issue. So if we look at the bigger picture, India is among the top 14 gas consuming countries globally, and we consume around 62.2 BCM, while US consumes almost more than 15 times, more than 12-13 times than what we consume. Now next, the natural gas consumption in India is presently almost 165 MMSCMD, and if we see that currently fertilizer sector accounts for the major share of the consumption in the country. However, growing at a CAGR of 12%, consumption of CGD sector is expected to increase significantly in the coming years. Now, if we look at it from another perspective, we find that it is said that by 2030, our GDP is estimated to increase to 7 trillion. And if Government of India also has a target, we know that they targeted that gas should reach up to 15% of the PE mix, while the world average was around 24. So this results at a whooping CAGR of 25%. If we take the impact of both the things, because it is expected that if the economy grows, then the energy needs grow at least as much. India's current policies focus on fuel switching through promotion of natural gas. So if you see smart cities and all, they're talking about switching to natural gas. In some of the cities where the pollution is little high, we are talking about converting various industries also on natural gas. Implementation of unified tariff, which has happened recently, it will expand India's gas penetration, especially in East India, because now the tariff is unified. So if the distance is more than 1200 kilometers, the tariff remains same. So those places which were far away, they will be getting benefit from this. India also recently linked domestic natural gas pricing with crude oil prices, and there was significant decrease in prices of PNG for households and CNG for transport. You might have noticed that. Now, such reforms will help expand the consumption of natural gas and contribute to achievement of target of emission reduction and net zero. Increased availability of domestic gas, including HPST, has aided in import reduction. Even today, a bid is going on for almost 6 SCMD of new HPST gas production, and this has reduced the dependency of Indian gas sector from 48.4% to 44.2%. So this is about gas infrastructure in India, one nation, one grid. The authorized pipelines are already 33,527 kilometers, and out of them 21,888 kilometer pipelines are already operating. So we envisage that the national gas grid length of 35,000 plus kilometers next 4-5 kilometers. Now this is about a very important key area of city gas distribution. If in this map of India, if you see the green part, so that is the area which has been already allocated to various CGD entities, and up to 11th round, and 11th, if we include 11th A round also, so 295 geographical areas have been allocated to various entities, and it has almost covered 88% of a country's area, and it covers almost 98% of country's population. And we expect a CAGR, as I said, around 12% in coming years from this area. Already there are almost 5,000, more than 5,000 CNG stations and more than 1 crore DPNG connections. And this has played an important role in clean fuel reaching to various households, because as many LPG connections have been shifted from cities to rural areas. Now this is about petrochemical business outlook. India's per capita consumption of plastic is just 12 kg versus China per capita consumption of 82 kg. So, and world average per capita consumption of plastic is around 38 kg, while US consumption is as high as 93 kg per capita. So, although in India we we believe more in reuse of things and we use 3 R's, So, but then still there is a huge scope of increase in consumption of plastic. India's per capita consumption is, by the way, one of the lowest in India, and future polymer demand growth is estimated to be at least 6 to 7 per annum. Major highlights of GAIL's petrochemical business we cover: sold 645 KT of polymers, 399 KT by GAIL and 246 KT by BCPL. PC capacity enhancement under progress, 500 KTA PDH-PP plant at Usar and 60 KTA PP plant at Pata. SAS-based mobile app implemented to analyze different key parameters metrics of PC marketing. So growth drivers coupled with capacity addition will result in growth in top line as well as bottom line for GAIL going forward. And this is the last slide for me. So about net zero, GAIL has put a net zero target of 2040 and 3 gigawatt RE by 2030, 100% reduction of scope 1 and scope 2 by 2040, and 35% emission reduction of scope 3 by 2040. So these are our targets. In compressed biogas space, we are doing very well. GAIL is supporting almost 400 CBG plants. 334 LOIs have been given for 1,835 tons per day of CBG issued. The GAIL's pilot 5 tons per day CBG plant in Ranchi is under construction. CBG project in Bangalore is under approval. Apart from this, we are there in almost complete value chain of CBG. We also have one CBG CGD synchronization scheme through which we have almost garnered more than 50% of the market share of CBG in India. Regarding hydrogen, already blending of green hydrogen is being done in Indore, MP. A study by EIL on impact of H2 blending is being done, and setting up of 10 megawatt electrolyzer for production of hydrogen in Vijaypur. GAIL is also has also done acquisition. GAIL resolution plan has been approved already by NCLT, Wide Order dated 13/3/23 for acquisition of JBFPL, and GAIL acquired 26% equity in LNG Japonica vessel of Mitsui. So that's all from me. Thank you. Thank you.
We can start the Q&A, sir. Any questions from the audience? We can start. This gentleman.
Sir, first and foremost, you have delivered an all-encompassing presentation. Each and every aspect of the gas-related energy security has been brought to the notice and to the forefront. 3 things came to my mind. You are having 13 ENP blocks. Are we hopeful of reducing our dependence on international sourcing of gas once we find our own gas? Because we are subject to international price fluctuations of gas when we source it. And second, even supplies are erratic, to say the least. Would like to have your thoughts on the same. Yeah.
I heard you wanted to ask 3 questions. No?
Yeah.
So next 2 also you are asking? Or
no, it's included in all.
Acha, okay. Yeah, we have presence in these ENP blocks, but the domestic gas availability, these blocks, I believe, how many are domestic and how many are international? 11 are domestic. But immediately, these may not come to production stage. So as of now, immediately speaking, in fact, domestic gas mental is with ONGC, oil, and certain private companies. And but what we are committed to is that we will meet the requirement of the country in terms of requirement of gas. So whatever is the shortfall in consumption versus the domestic production, that mental is with us, and we will make that gas available to the country for its consumption.
Sir, in view of this, you have to import the gas, and import of gas is basically on spot prices. There is no future and forward contract, so that we can freeze the price as well as the quantity which we require over a protracted period.
So for that, we have long-term contracts, though again, those are formula-based only, and the prices can fluctuate, but not to a wide range. We have a very handsome portfolio of 14 million ton across four geographies. That provides a great amount of flexibility, that is almost 50% of our total volumes. And we are trying to increase those long-term contracts also. We are in discussion with various entities.
Yes.
And hopefully some more contracts will be able to line up.
And the third thing was, you have laid a heavy pipeline network for gas distribution. Your presentation said it is capacity utilization of this pipeline network is 53%.
Yeah. Any pipeline, when it is laid, it has to be futuristic. Like you create infrastructure for cities, highways. Similarly, pipelines cannot be changed within a short span of time. So there is always overcapacity which is created in creating an infrastructure. So in some period, there definitely will be a underutilization, but the capacities have been envisaged considering the futuristic consumption of gas in the country.
So going forward, the capacity utilization will progressively, in a calibrated manner, go up.
Yeah, definitely.
Thank you and all the best.
Good evening. I am S. Ramesh from Nirmal Bang. So this is with reference to the guidance on gas transmission and gas marketing EBITDA. So if we can get some sense in terms of how much of your gas transmission profits you are expecting next year is based on the growth in volumes. Similarly, for the gas marketing profit expectation of 3,500 crores, how much is going to be driven by the increase in volumes, and is there any improvement in the margins you're expecting there? If you can share your thoughts on that, I'll be grateful.
In gas marketing, we are expecting an upside of about 8 to 9%, and in transmission, approximately over 108, another 10 going forward for 23-24. And these volumes plus the revision in the integrated tariff for transmission will account for the guidance given for increase in the profits from these verticals.
Okay, so in transmission, when you're looking at this increase in the transmission margins, will the entire one-off impact of the shortage of APM gas be eliminated over FY24, and when it will actually start, showing in the numbers? Will it happen from first quarter itself, or will it come with a lag?
So since the integrated tariff have been revised effective 1st of April, the additional impact of about 1,500 crores, the positive impact of 1,500 crores will start flowing from 1st of April itself. The increase in the transmission and marketing will be a gradual increase over the period. For this fiscal. Yeah.
Okay. So one last thought. On the petrochemical business, can you give us some idea about the spreads you're earning on your gas cost as it stands today? And what is the kind of spread you're expecting based on your expansion plans in polypropylene? Because right now there is overcapacity, weak demand, and the spreads are at 10-year lows. So we'd like to understand what is the kind of spread you're earning, because for naphtha crackers we get the number, so for gas crackers slightly difficult. So if you can give us some sense on the current spreads on your current gas cost per ton, and what is the underlying expectation on future spreads based on which you are planning your polypropylene expansion?
No, we have already approved those projects, and in fact the construction is on, and any such projection is not based on any short-term views on the futuristic prices. Petrochemical is a cyclical business where the prices touch a peak or trough at almost 5 to 7 years. So perhaps this particular period is a period where the prices are at their lows. But we hope that going forward we will have good periods in petrochemical profits also. Are you interested in a specific realization for this period?
We can make out the realization. We are trying to get a sense in terms of what is the spread per ton in terms of the margin you are earning on the realization and the cost of gas.
No, this period was definitely adverse, where the prices are also low and the gas prices were high. So definitely this period the margins were very low. But would you like to give any number?
No, one thing, as Chairman Sahab has already clarified, it is difficult to give any number, but what we can say that we had actually lost in last financial year, but this year we will be actually having margin. That means we will not be having any loss and we will be in positives. That's what we can say at this stage.
Okay, if I might squeeze in one last thought. So in terms of your overall expectation for future ROC, would you expect the improvement in ROC to come from gas transmission, gas marketing, or do you see incremental upside from, say, the commodity businesses like petrochemicals and LPG and hydrocarbons also? So where do you see the levers for improving ROC, say, in the next 1 or 2 years?
No, in fact, as compared to the current year, that is 22-23, we are seeing an upside in every vertical of our business, be it trading, be it transmission, be it petrochemicals or LHC. Because this particular year was very adverse for all the segments. Now, definitely the upside will come in the segments of trading or transmission by virtue of the growth. And similarly, petrochemical plant which operated at lower levels because of the high gas prices will not be there in the future period. So again, because of the growth and the natural gas prices, we will have the profits in that segment also. Similarly, LPG prices were also not very strong in this period, and we are seeing positives on that front also in the LHC segment going forward.
Thank you very much and all the best.
Hello. So one question on the transmission aspect. So the total one-offs for FY23 were around 1100 crores for transmission. How much was that in Q4 of 23?
Q4 we had almost 730 crore.
So this is mainly high cost inventory. So anything likely to move up to Q1?
There are not only high cost inventory, there are essentially 2, 3, 4 regions. One is high cost fuel consumption. Second, we have made a provision of 100 plus crores of KMBPL pipeline because we changed the route. Earlier we were laying through field and now we have changed through highway. So that investment we have made provision. 150 crore we have, transmission loss. Normally it happens, but this time we accounted for in Q4. And 70 crore is one case of IPCL versus GAIL of old transmission, which we have provided for. So apart from 400 crore, there are 300 plus crores. These are the regions.
Sure. Thank you, sir. So any such one-off expected for Q1 or Q2 going forward? Because for transmission, the loss was surprising in a quarter. So
that's right. We are not expecting anything else because high price issue we have taken care by sourcing the domestic gas for meeting the fuel consumption requirement, and others were actually not a routine kind of things like provision and all these things.
So, and on the gas consumption, which is internally consumed mainly for transmission, petchem, so can you have the numbers at least annually for how much, if you want to bridge the gap between your revenues and EBIT, at least it can have impact data on the GP level for the segment. So how much is gas cost in the transmission business in rupees or volume, whatever you can get?
That we can do. So we'll work out and give you. You want that?
On the capex part, the pipeline networks over the years has increased, but the MMCMD is not taken pace in the same level. As Chairman mentioned about that, it takes it according to account of demand from future years. So any upside we see in the volume, now we are expecting from 107 to 118 for 24. Structurally, do we see a certain CAGR 2-3% going forward, or it will be still a long shot?
No, definitely this volume increase which we are talking about for this year, this is in respect to the pipelines which are existing and the pipelines which will get commissioned in this particular period. But then going forward, we'll have new pipelines which will get commissioned, which is Mumbai-Nagpur, Jabalpur-Jharsuguda pipeline, and also KKM-BPL pipeline will be connected to Bangalore. So these volumes, these are centers where the consumption is good, and so definitely we can expect a growth in the following years also.
Let me add one more thing to what Chairman said. The 53% capacity utilization of 52% is based on the individual pipelines, which is the tariff regime as on today. Now from 1st April 23, the tariff regime has changed. The pipeline which transport volume from one pipeline to other pipeline will not have the additional capacity which will be considered in the upstream pipeline capacity. Therefore, the total capacity has gone down, and in a sense, the capacity utilization will improve.
Okay.
So that capacity utilization, if what Chairman said that we expect 118 MMSCMD of gas to be transported, and the capacity considered by PNGR is around 170, so that capacity utilization will be around 60-65%. You can work out for yourself.
Okay, so one last question on the, again, transmission. The volume was good for Q4, but there is a drop in the revenue per MMBTU. So can you please explain on that? On the transmission segment, the per unit revenue upon MMBTU on the transmission segment. So there seems to be a slight drop in that. So
in Q4?
Yeah.
One of the, we'll analyze and give you, but one of the reason is that 70 crore revenue we have knocked off for the provision made for IPCL, and there may be some more reason we'll work out and give.
Okay. Thank you, that's all. Thank you.
Hi, this is Vivekanand from Ambit. I have two questions. One is a follow-up on the previous participant's query. So the slide mentions deallocation of domestic gas for compressor fuel as a one-off. You've mentioned an amount of 800 crore in the transmission segment. Why should we see this as a one-off, given that you are no longer going to get domestic gas for compressor fuel for your transmission operations? And secondly, a related question, on the one-offs, the inventory loss that you have booked now for 2 successive quarters. Is there any more high-cost inventory that is there in the balance sheet that is yet to be impaired in the first quarter? Thank you.
Thank you. So for two reasons, the fuel consumption, there will not be one-offs. One, that the cut in allocation for domestic gas was sudden, and it has happened on 16th of August 2022. So you know that at that time the prices of LNG were at its peak, and we didn't have any other gas. Therefore, we need to source highest price gas. That was a $41 per MMBTU. Therefore, we were to book the differentials for APM gas price versus the actual price, which is not the case today, because now we can plan for ourselves, because we know that the cuts have taken place, and that's what we have done, and we have the gas available for booking. So those kind of differences does not exist. And second reason is that the whatever extra cost we have booked, we have already represented to PNGRB for considering those costs, and PNGRB, even without our representation, its tariff order has said that extra cost will be at HPST price. So these gas prices are anyway available through tariff review, which PNGRB is already considering. So that's how we expect that we say that these are not one-offs. Second, with respect to inventory loss, again, the inventory when we bought, the prices were at peak, and then all of a sudden the prices start dropping. Now those inventories we have already valued at a lower price, or market price is lower than the cost price. Therefore, we don't expect this to happen in subsequent quarters.
Hi, sir. Good evening. This is Nitin from Yes Securities. So my question is also related to the system use gas. So basically, we had seen a deallocation in the last quarter again. So my question is with relation to the opening remarks where you alluded that the tariff has been appealed for again, and there's a difference between what PNGRB has given to you and what you had asked for. So when you have filed an appeal, is that appeal for revising the price only, or also includes basically a provision for revision in the quantity? Because right now, whatever allocation you have for compressor gas can go down further, right? So when you want a revised tariff, you would want it revised for the quantity as well and also the price, or you have just right now filed only for pricing?
Actually, the quantity revision is not in the scope of PNGRB. The Government of India has allocated us the APM gas for the purpose of fuel consumption of fuel in GTGs. So that's not the case. But with respect to our review petition, it is the price which PNGRB has considered in its tariff order is $3.61 per MMBTU, which is not even the APM price. So we have filed the review petition to consider the right price for future projections and actual price for the gas we purchase for meeting the urgent or emergency requirement on account of gas allocation cut by government.
So I understand that. I mean, the price of 3.6 that PNGRB has considered, that's for a quantity of APM gas, right? There's an assumption of quantity as well as price, right? So when we are now in May, the quantity that you have with you is certainly lower than what PNGRB had considered in their tariff order. So I'm asking that, how is that going to get factored in going ahead? And secondly, related to that only, if suppose your sourcing is not on HPST but on LNG, so would you also be compensated for the price of LNG, no matter what the price is?
The PNGRB actually has considered the price of APM, not even APM, $3.61, and since we have represented, we expect that PNGRB will consider. There is no doubt about that, because regulatory position is very clear that they have to give actual or normative price, and which is the case with respect to HPST gas price also. That PNGRB has said in its tariff order that they will give HPST gas price for meeting the differential requirement. We have also sourced the gas in alignment with that, but even if it is higher, even if we require to source the LNG, because we have to only demonstrate that we have purchased through a transparent mechanism, because law position is very clear. There is nothing in law which says HPST gas price. It's an all tariff order. Like they have considered 3.61, they have said that they will consider HPST. But this is not in line with the law. Though we are hopeful that we will be able to source the HPST gas price, but even in case for any shortfall, hypothetically, that is allowed in terms of the regulations.
Understood, sir. And lastly, sir, for LPG and LHC, are we getting all the quantity that we require in form of APM, or we are sourcing any LNG over there for production of LPG and LHC?
So we are getting the allocation of 1.75 for LPG and LSC, and we are producing based on the allocation only.
Understood, sir. And sir, lastly, again, so in terms of tariff revision timelines, so what is the standard timeline right now for normalization of actual costs? I mean, for factoring in of actual costs, operating costs in tariff orders?
Actually, the law position is that PNGRB will review its tariff every 3 years.
Okay.
But law also says that in case of any change in the parameter, significant change in the parameter, either PNGRB on its own, that is suo motu basis, or based on the request of entity, they will revise. So in this case, since there was a change in parameter, because what PNGRB had considered and what it was actually they should have considered, we represented. But with respect to timeline, it is very difficult for us as an entity to predict that they will do today, tomorrow, or they will take 3 to 6 months, whatever. What we can do, we will follow up with them and expect that they will do sooner.
Sure, sir. Thank you, sir.
But the delay does not affect us.
Yeah. And yes, Chairman has rightly pointed out that even if delay is there, because the tariff is calculated based on DCF model, which considered the net present value of expenditure incurred, and that is grossed up at the rate of 16%, that to provide 12% post-tax return.
Yeah, thanks, sir. Yogesh here from Dolat Capital. So, question is related to again the gas demand. The CMD sir said that the gas transmission volume will go up from 108 to 118 in FY24. So, apart from CGD, where do you see a gas demand? So, it can lead to a gas transmission volume 118. Secondly, what is the current status of these fertilizer plants? How much they are consuming and how much additional consumption can be done in FY24?
So, in morning also Chairman Sahab said that the gas marketing volume is likely to increase by 7 to 8%. Your question is essentially from where it will come. So, as you know that HURL has plant at Baroni and Sindri. Those plants were commissioned almost at the end of this Q4 of financial year 22-23. And we'll have consumption of more than 4 MMSCMD. And we have marketing rights to them, almost 90%. So the major volume will come from there. Second, as you know that CGD is growing every year with the CAGR in double digit. So almost 3 to 4 million volume comes from there, and then even on a ballpark basis, you consider 70%, 60-70% share, around 2 to 3 million will come from there. So 7 million, I am telling, even if we consider that there are no consumer going to come up. Third, we put last year supply cuts to fertilizers. We also put supply cuts to other consumers, to fertilizer at take or pay level, and also to other consumer at supply pay level, which are also significant. So those we have, since we have restarted supplying to them, those volumes have already come back. So these are the actually given numbers which I have said, and even if we consider those given numbers, the 7 to 8% growth is available in terms of marketing.
Okay. And the next question is regarding gas transmission and petrochemical. So gas transmission as of now getting 0.6 MMSCMD kind of APM gas allocation. So will it sustain? I mean, that is the basic question. And if it is not going to sustain, are you going to see fixed prices for the gas, which will give us a guidance that prices for the gas compressors will be used, so that at least we can forecast the things according to that. And the same for the petrochemical segment also. So in the last year, FY23, we have observed because of higher LNG prices, we were not able to operate that segment at 100% level. So why don't you enter into the long-term contract for the same two things, same two businesses?
Yeah, first on transmission, we do not expect that there will be further cuts in of domestic gas for that. But even if that happens and we are to source high-priced gas for that, as Jain Saab has already explained, that as per regulations, that true-up of the actual costs will happen in the next revisions. So it does not affect us really. As far as petrochemicals is concerned, there is no domestic gas allocation for that, and in any case we have to source our own gas. In this period the gas was unviable, and that is why there are losses. But with the prices having normalized to a great extent, now the availability of viable gas is there per se. But yes, we are trying for lining up long-term contracts also to service our petrochemical plants.
Okay. Thanks a lot, sir.
So Vishnu from Spark Capital. Following up on the previous question. So as of now, for Petchem, we don't have an internal long-term arrangement. It is at the spot basis. If you don't have any gas, we will resort to spot. Is that the understanding?
No, now we have a internal arrangement also, where almost a certain price will be allocated for petrochemicals also, to have a certainty of the profitability of that vertical. And as asked by the previous speaker also, and I replied, that we are also trying to source long-term gas, or at least mid-term gas, to service our petrochemical plant.
So whenever you sign new contracts, then you will fix a long-term with Petchem. A few questions on all the segments I have. So firstly, on your gas transmission, the new reporting basis, we have about 10 odd volumes, which is interconnected volumes. So when the new reporting happens from the June quarter, we will still continue to report 110 kind of volumes, or we'll eliminate the 10 volumes of interconnected and report. How do we go about it?
So the numbers we have given is already knocked off only the single number. We are not double counted.
Okay. And second, sir, on the gas marketing, we have kind of highlighted 3,500 crores. If you could help us understand, like, how much would be the, in this number, would you call that 100% this, irrespective of commodity swings, we will get X amount. Let's say if a commodity swing happens, then probably a certain amount can swing. So is there a fixed marketing? Because we were told that most of the volumes is now 100% contracted. So I understand there are multiple differences in this there. One, we have a fixed marketing margin. One, we have a HHS to oil difference. So what, if you could help us understand, at least in a proportion terms, that out of 3,500, 2,000 odd crores at least will be static. Anything that you can help us understand?
Yeah. So as you know that we have portfolio, apart from APM gas, we have portfolio of 14 MMTP of gas. And the RLNG which we are sourcing from 2004, that is Qatar, from Qatar, 4.5 plus 0.3 we sourced in 2015, all is back to back. So there is no risk of, pricing there. And Henry Hub gas, that is 5.8 MMTPA gas, we have already marketed more than 8 MMSCMD of gas out of the 5.8, which amounts to 20 million on same index with a margin. The margin varies from contract to contract. We have ability, we had ability when we marketed this to have handsome margin in that. Remaining gas, because we have also Gazprom gas and also United States gas, which we have not marketed, we have sold the gas at a contract of crude linked. Lot of gas we have sold at crude linked. And in order to mitigate the risk, we have already done basis swaps, and that is a continuous process we are doing to mitigate the risk. So based on these factors, of course we have some open gas, which we are able to take the benefit of arbitrage in the international market, as well as the spot gas in the country, like fertilizer, EPCM bidding. So largely we have marketed either on the same index with certain margin, or if we have marketed on different index, we have taken risk mitigation measures through swaps. So we have worked out based on that, and based on that, where chairman has said that 3,500 crore rupees will earn, it's our estimate that we should not go down below 3,500 crore, irrespective of the circumstances.
Sir, you said out of the Henry Hub gas that you're getting, 20 MMSCMD, 8 is directly sold in
8 plus, yeah.
8 plus, and the rest is on oil.
No, I have not said that. I have said that remaining gas out of that and Gazprom gas, we have sold a lot of gas on a crude linked formula. So crude linked formula means we have different contract. The RasGas contract and the Gazprom both have different formula. So we have sold at a certain crude link formula, and in order to mitigate the risk of Henry Hub, we converted the formula to crude link through basis swap, and since this time there is a lot of margin where we are swapping, so we have mitigated the risk and also added certain delta to that. And And some of the gas still we have open gas, which we are able to market in international market, considering the arbitrage are available, and also in the domestic market. I have said that.
Got it, sir. Last one from my side is we saw the project capex that you had. Earlier calls also were saying that more or less our pipeline investments will not be at the pace at which we were doing. So is that right? And also we saw one presentation where you had, looks like new pipelines have at least is being proposed completely on the eastern corridor starting from the north to the south. So will the pipeline capex again go up compared to what at least the ones that we are currently having?
So the pipelines which are under construction are the Srikakulam-Angul pipeline on the east coast, the Mumbai-Nagpur-Jabalpur-Jharsuguda pipeline, and KKMBPL pipeline. These three major projects are going on as of now. So, and these all will be completed by the end of next year, by the end of 24. So, I do not know whether
my question was after 24-25, again we'll have a slew of new pipelines that you think will be required, or more or less in the best opinion of yours, you believe that we are more or less done with the large capex in the pipeline segment?
No new pipeline has been, sort of EOI has been issued by PNGRB, except for in the northern India for Gurdaspur, Jammu?
Yeah.
Batinda, Jammu or Gurdaspur, Jammu perhaps, no?
Yeah. Batinda, Jammu, Srinagar, Batinda, Jammu.
Srinagar has not been.
Yeah.
So up to Jammu
Gurdaspur,
only.
you are right.
So that is one section where we have also submitted our interest. But besides that, no new pipeline has currently been notified or is under perhaps thinking.
So capex intensity in this segment should come down.
In this segment should come down.
Got it, sir. Thank you.
Just to supplement and further what Chairman Sahab has said, that in visible 4 years, we have good amount of capex on pipelines. And also we have good amount of capex apart from pipeline of petrochemical projects. These are the two segments where we are investing in 3 to 4 years. And as you know that we continuously search for the projects. So as we move forward, we have new areas where we invest.
So we'll take one particular project which I did not mention is the Indradhanush Gas Grid Limited, which is a northeast gas grid, which 5 companies put together are doing. Our share is only 20% of that. But no large cross-country pipeline perhaps would come in very near future.
So sir, we will wrap up with one last question. It is 5:30 now. One last question.
If I might ask a follow-up question to Mr. Jain. You referred to the swaps for the Henry Hub gas. So can you give us some sense in terms of the hedging cost? Because I saw a line item in the cash flow for an MTM gain of about 100 crores. So is there any swing in your cash flows which we should be mindful about, and what will be the hedging cost?
I am not able to see you where.
I'm here.
Yeah. Hedging cost is not, there is no hedging cost. Whenever you trade in future, there will be a premium. And whatever we settle in, you see in the cash flow is nothing but the call we take at what price we are locking and what actually are the physical. Ultimately, it is get squared off. Either you get in physical or you pay in physical. So there is no cost as such. The cash flow is nothing but for call you exchange, I think, if I understood you rightly.
He may be asking about options. I don't think we are doing options.
We are not taking options. We are only taking swaps. Largely we are taking swaps. If I am able to rightly answer to your question.
Yeah, I got it. I got the drift of it. Thanks. So in CGD, can you give us some sense in terms of when you expect GAIL Gas to, get returns commensurate with the investments? Because the returns are below par compared to other CGD companies. So what is the timeline over which you would expect to get, reasonable ROC on the CGD business in the GAIL Gas subsidiary?
No, when you say others, I just want to know which are these others.
They are all listed companies. Indraprastha Gas.
No, that is what perhaps my thinking was, that Indraprastha Gas or Mahanagar Gas have matured actually. They have been operating for decades. So GAIL Gas definitely is a much newer entity, and there will be some time before the connections expand in those areas, whether in terms of CNG or PNG. But definitely these have got good potential areas, and we hope that going forward, it takes time for maturity of such business. But we are very hopeful that definitely the growth will be there in times to come. No immediate guidance on this cannot be given. Yeah.
Thank you very much. I appreciate that.
One last question from Varta.
Yeah, so the Gazprom contract, what is the current status? We see in the newspapers that deliveries are starting and likely to continue. How does it change the entire marketing side of it? Like, are you going to move part of your US gas back to international sale now that Gazprom is going to be available? And secondly, is there any compensation which is being discussed or worked out for the shortfall which was there for the last 9-10 months?
The resumption in supply by Gazprom is not going to significantly change our position in the international market, given the demand that has already fructified. So this will only add up to the consumption in India. That is your first question. That's my answer to your first question. And second one, compensation, yes, we are legally fighting it out, and exactly how much it is, we'll not be able to quantify as of now. But we are in a legal mode.
Fair enough. So now that the Gazprom volume is coming, whatever guidance CMD was talking about the trading volume or trading profit growth of 7 to 8%, does that number include already the Gazprom delivery, and you're assuming it's going to continue full-fledged? Yeah. Or was that from a different side, on the demand side?
No, that included that volume also as well.
So we were to get 4 cargoes per month under that contract, which we are getting now, and we are hopeful that that should continue. Last year, because of the disruption and the high prices of spot gas, that could not be made up. But now we expect that with the current ruling prices, even if there are no supplies under that contract, we will be able to source gas even at the spot prices, and which will be affordable to the consumers also. So no impact on that front.
Fair enough. On the high-pressure, high-temperature gas which you have acquired from KG Basin RAL auction, part of it I'm assuming will go to the pipeline. What about the remaining?
What about remaining?
The KG Basin gas which you have acquired in the auction, I'm assuming part of it will go to the pipeline compressors. How about the remaining? Where are you placing them?
We'll use it in our, for our internal consumption in other processing plants as well.
No, there is no one-to-one allocation, no? कोई उसका ऐसा usage तो नहीं है ना? मतलब it will be available in our portfolio for any purpose we want to use it for.
So my assumption was that, given that there is a regulation on the marketing margin you can charge on that, so I thought it was supposed to be one-to-one. So
is it supposed to be one-to-one? I do not know.
No, it's not.
HPH, no? Praveer, will you like to tell something?
Sir, what happens is that part of it we are buying for IC as SUG pipeline. Part of it will be buying for our Pata petrochemical plant. Part of it actually as a strategy we are buying it and then will be allocating to various customers as and when they come. So we will be having that as a bouquet we'll be offering to various customers. So this gas will be available with us. So that is.
So no one-to-one usage. It is up to us. This is available in our portfolio.
Yeah, marketing margin is as per the 13 January circular of MOPNG, which regulates it to, I think, 16 rupees 42 paisa per MMBTU. So that will be my limit. But then that is also not, it is around 20 cents in dollar terms. So that is okay. As a prudent business operator, as a marketer, We would like to have that in our portfolio for sale for other customers. Thank you.
I don't know if it's working. So I take this opportunity to sincerely thank the top management of Gas Authority of India Limited and all the investors who could attend this annual conference. Thank you, sir. Any final comments from your side?
No, only the final comment is that this was a one-off year, 23-24, where perhaps all kind of adversities happened and affected all business segments. But we are extremely positive about the next fiscal, and hopefully we will record a very robust number going forward. Thank you.